YouTube, I'm back with another banger. I know you just clicked on the video. I know you want to watch these three ICT levels and how I use them. Let's get straight to it. Right here, right now. Let's go. So honestly, this is my favorite level and setup type right here. It is when we have a high time frame gap. In this case, it was a new week opening gap, but we're gonna use it still. A high time frame gap with a 1 hour swing low inside of it, right? Now you're wondering, why is this level important? Okay, it's a great question. In theory, with these high time frame gaps within them, there are high volume hedge fund orders, right? So they're in the gap. Now, let's say we go and sweep this gap already, but we don't fulfill it fully. We do not come through and fill the whole thing. We leave a bit of little space, right? What if that's the case? Okay. Then we have a swing low sitting inside of liquidity, right? We have a swing low sitting inside of a high time frame gap. And when that happens, that creates even more liquidity because now there's orders resting right below this low. A bunch of call orders, a bunch of buy orders, right? So this is the first type of A plus. This is the first level, okay? So let's go ahead. Let's use the FX replay. Let me fix this for you guys. All right, so we have this liquidity marked out right here. This is the high time frame gap, and on the 1 hour, this is a high time frame swing low. So we have an A plus setup sitting right in front of our eyes. I want to go down on the 1 minute so you guys can truly see what this looks like. So at this point here, we're not trading. There's no reason to trade at all. You're waiting for liquidity to get swept, and then you're waiting for an inverse. So that's really all that matters. Let's go ahead and get straight to it and see what happens in this little 1 minute time frame. So okay, we end up sweeping it, but we don't get a clean inverse at all. All right, not one clean inverse. Okay, I'm gonna slow it down first a little bit. Let's have some patience here. So we end up displacing a little bit more, sweeping one more piece of liquidity, this internal liquidity right here. I'm sweeping it, and we get an inverse fair value gap right here. Chance, how's that an inverse fair value gap? I'll show you. There's a gap right here, and we inverse it after we've already swept liquidity and internal liquidity, and we're shooting out of a new week opening gap. So okay, we place our entry here. I'm sorry about that. Place our entry here, and then we can put stops right below. We can put them right here, right below the inverse fair value gap, and I believe break even. Oh my gosh. Let me turn this magnet off. That's why I keep turning the magnet on. All right, so we get our inverse fair value gap after sweeping internal liquidity and sweeping the new week opening gap with the swing low inside of it. You enter on the first inverse fair value gap, and then let's let it go to work. It's really like pretty simple. It's a simple concept, but some people don't understand how to apply it. Right here is where I would have went break even. So again, this is liquidity. Huge gap, swing low, sweep. 1 minute inverse right there. Enter. 30-point stop loss. 100-point TP target. And pretty simple. Let's go to the next form of ICT levels that you can use to profit correctly. Huge edit come in. 3, 2, 1, bow. Okay, also boom. This is the second, whoa, hat going off. This is the second level or form of level that I use from ICT to profit. This is the session high. Okay, this is a session high. All right. London is the orange little hue that's over this little range of candles, right? This is the high. And all you do is wait for the high, aka liquidity, aka ICT level, aka life model, to get swept. All right? So let's watch it get swept. Okay. They sweep it. Woof. Woof. So this is what I'll do for y'all. On this little range up, or should I say leg, this little leg up, let me turn the magnet back on. On this little leg up, we ended up creating a fair value gap. As we sweep, 1, 2, 3, 4, we get a decent amount of volume on this inverse after sweeping a high form of liquidity, okay? A high form of liquidity. You can put your stops at swing high. You can put them down a little bit more. Where I would put them is right here. Perfect for a mini. 31 points, maybe $600. Not maybe, $600 for stop loss. And yeah, what would I target? Honestly, I would target this unfilled 15-minute. So we got our session sweep. That's London right there. I'll mark it out for you guys. Put that on the left. Sweep, IFVG. Let's let it play out. Let it play out. I'm gonna speed it up even more. Let that one just run, and we end up banging. Very, very simple. Okay? Very, very simple. London sweep, IFVG on the 1 minute. And yeah. Target unfilled 15, target London low. Let's see if it got to London low. If it went from London to London. London to London trade. Yeah. This would have been a big day. So ended up running for how much points? All right. I'm not even gonna let it go any longer. You guys see right there. The third example will be a data wick. And I'll get right back to you guys when I find a good one. All right, boom, y'all. So the funny part is I had ended up going to another day to look for a data wick example. The whole time it was on the same day as the session sweep example. So I guess November 3rd, Monday, 2025 was just a beautiful day. Let's get straight into it. The data wick. A data wick is a red folder event candle, high or low, that is left after a reaction that has been released on the economic calendar, right? So let's say something really, really bad happens and we shoot down, but we end up leaving a wick up at the top. That is a form of liquidity that we're waiting for, right? So we had a red folder news event at 10 a.m. I remember this day. Red folder news event. We ended up leaving a nice little wick right here. A nice, small little swing high. So let's see what happens. Let's see if we can get some legs up to it. Okay, we get there. Okay, so we sweep it. We don't even close above it. We sweep it. As we sweep it, though, we're creating a bullish gap. Let's see if that bullish gap can get inversed. Okay, so we've swept the data wick. We've inversed only in 1 minute, very quickly, in a fashionable manner. V shape. So now 2 and 2 have been put together. You have to enter. Stops at swing high, or you can go right below the inverse fair value gap if you want. Might as well just go swing high though. And where is the closest form of liquidity? Okay. I'd say this is the closest form of liquidity, logically. Just logically. So we've entered after this inverse and we've entered after this sweep. Let's see if we can get to TP. Let's see it. Okay, TP. Beautiful. Beautiful. All right. This is what I want you guys to understand. These 3 levels, they're very, very strong. IFVGs cannot be pattern traded. You can try it if you want. I do not believe it will work. You need context, and I believe deep down this is the context you need. If you want more help or advice, Discord, it will be in bio. Very, very thankful for everyone who tuned in. I'm thankful for a lot of my team members because they helped me get to where I am and they helped me create this strategy. And a road to 1K, all right? Coming into 2026, we're going to come out firing. So drop some video recommendations you guys need, and I'll catch up with you guys later. Bless up.